you know what they say, with friends like these, who needs enemies? Not Yahoo. The company making an agreement with activist investors and one of the most vocal critics, Starboard Value, naming Starboard CEO Jeff Smith to the board, along with 3 other independent directors. Now, Smith is not only pushing for Yahoo to sell the core business, which includes mail, search, fantasy sports, Yahoo Finance, the blogging site Tumblr. He's also calling for the ousting of CEO Marissa Mayer. Spring and Yahoo investor and Gabelli Multimedia Trust portfolio manager Larry Haverty. Larry, good to see you. Thanks so much for joining us.
Hi, Maria.
Isn't it interesting that here's the guy who wants to turn over this company, and now Marissa Mayer has to put him on the board? This obviously was, she's getting pushed to do this. What's your take on it?
Well, I think there were 2 choices here, Maria. Either the board changes things and sells the company, or someone comes in through a proxy fight and does it for them. And the latter, I think, would have more breakage. The cash flow in this company is declining precipitously. I'm looking for it to be in the neighborhood of $750 million this year. Many years ago, it was higher than Facebook. Facebook now has $9 billion of cash flow. So, as you said earlier, Facebook won, Yahoo lost, and as Barry Diller would say, after he lost Paramount to QVC next. And it's better, I think, for the board to engage and do the sell process than basically you deal with a new board and you start from scratch, and you have a lot of the good employees, and I have no doubt that there are a lot of good employees jumping ship and going somewhere else in Silicon Valley, which is very easy. So in my opinion, this is an optimal situation. Our estimate of the best possible situation, which at Gabelli we call private market value, is $53. Stock's in the neighborhood of 37 right now. I think if there's some tax leakage, and that's really an unknowable, you're going to look at somewhere around $43, $44. I think the basic assets, my guess was that they were going to be valued at about $6 billion, and the first round is 4 to 8, so $6 billion looks low.
Does that mean you would buy Yahoo stock, or you own Yahoo stock? Would you accumulate more?
Yahoo is one of the biggest holdings in our fund, and I would be a buyer of the stock if I didn't own it.
Larry, do you also own Facebook, by the way? We were just having this discussion about the difference.
We sure do. They're both in the top 5.
Yeah, that's a big mover this morning, Michael.
Larry, let me ask you about those core businesses. Do you see any synergies between those businesses, or do you think they're actually better off as standalone operating companies under new management?
Well, I would like to see the company in the hands of Verizon. Verizon hired Tim Armstrong from Google. Google has been, with the exception of Marissa, a company that has been very good. It's kind of like GE in the old days when Jack Welch was there, at exporting its management. And Tim, I think, is a spectacular manager of Internet assets. He's taken AOL, which I think was justifiably lost for dead, and made it through a series of skillful deals into a big force in programmatic advertising. And Yahoo would fit, the assets there would fit very cleverly into the current Verizon mantle. Clearly, Verizon has an interactive strategy. They're not talking about it. I'm sure Tim is very well compensated.
It's a backdoor way to do exactly what they wanted to do from the get-go. They wanted Tim Armstrong to run Yahoo, and they wanted Yahoo and AOL. This is Starboard. They wanted Yahoo and AOL to get together. If Verizon does the deal, that takes care of that.
Yeah, I think it's a marriage made in heaven, and the thing that's beautiful about it, Maria, is that it's so easy for Verizon to finance it. If you look at $700 million of EBITDA and $6 billion deal for the assets we're talking about, that's only a finance cost of about $150, $180 million before tax deduction. So it's immediately accretive to Verizon's cash flow. And then you have the potential of this cash flow growing by 20, 30, 40% a year under the proper leadership.
Right. All right. Well, that is obviously a good story from your standpoint, given that you own that. And Facebook is a big story this morning. But let me ask you this, Larry, before you go. We've seen real weakness in a number of these quarters within technology, and the tech sector has been the laggard here just most recently. Is that warranted? You're a tech investor. Is the weakness we've seen warranted for the most part? Putting Facebook aside.
I absolutely don't think so, Maria. I think with regard to Google, I look at revenue growth, and I try to keep things really pretty simple. And the thing I'm looking at is how much of the revenue growth is converted into cash flow. And Google has all of these spectacular investments and that nobody knows about,
right.
the driverless car, the fiber, et cetera, the science projects, if you will. And the incremental profitability in Google historically, and I have every number they've ever reported,
right.
no one can predict it ex ante.
Yeah.
And that makes the stock nuts. In the last quarter, they only converted, I think, 33 or 35% of incremental cash flow to EBITDA. Facebook in the last quarter converted 68%. So the market loves 68%, but 33% isn't bad if you're not throwing the money down the rat hole, if you will.
Yeah. So Larry, then there's Amazon.
That will change over time.
Then there's Amazon. Real quick, would you buy Amazon before the quarter tonight?
Yeah, absolutely, Maria. I think Amazon Web Services is one of the best businesses in the world. This gives Jeff Bezos an unlimited opportunity to get into other businesses. He has a marvelous business with this third-party business in the commerce area where he collects basically a referral fee for using the service.
All right.
Every business they're in, they're gaining market share. So the stock's expensive, but it's going to continue.
Yeah, that's another behemoth. Yeah. Larry, thank you very much. We will see you soon, sir.
Thanks a lot, Maria.
Good to have you on the program this morning. Larry Haverty, and we'll be right back.